Hi everyone, hope you're all doing well. Welcome into today's video. Today I've got 4 stock updates for you. I didn't feel like there was a mega news story to cover today, so I thought I'd take 4 interesting news stories that have dropped in the last 24 hours and talk about those sort of stocks. I didn't know as well if Wise, that's starting to look a little bit interesting. That stock's now down 19% year to date. Don't know if that's worth covering at some point, or maybe I'd cover it on the private group. And same for Future, they came out with results today. Stock markets seem to like it. Stock's up about 6%, although it's been an awful year for them when you zoom out. And that looks like a little bit of an interesting opportunity. So same again, don't know if that wants covering on the YouTube channel or maybe the private group. You guys let me know. But apart from that, I'm going to cover 4 interesting news stories that dropped in the last 24 hours. Starting with this guy, PayPal. Now you can see yesterday the stock, boom, a bit of a significant drop, 4% there on the day. And it's been a bit of a tough time really for PayPal. The market's put a bit of a rebound in and PayPal's gone, I'm not having any of that rebound. I'm going to stay at the $60 range and even try push into that $50 range potentially. Now, what's going on with PayPal? What caused the drop yesterday? Well, PayPal were at the UBS 2025 Global Technology Conference and the CFO was talking, and basically the CFO went on to say that in the third quarter earnings call we had seen some macro pressure in September and that it has persisted into October. So I think I mentioned that on the YouTube channel when I did a full dedicated video to PayPal. You guys on the private group, when we did the earnings review of PayPal, I said that that's the one thing to watch, is that comment that was in the conference call. These are the things, this is why you've got to do the big research, guys, when you do individual stock picking. Obviously, if you're doing the research, that's no surprise to you. Now, what was added on the conference call yesterday at this USB conference is the CFO went on to say this. And we are continuing to see that persist in our performance in November. When you look at below the surface, we have a very middle income, lower income Main Street America sort of customer base. So they're saying that the lower income, middle income customer base are feeling cost pressures and that there is what they're seeing is slowdown in November. They were kind of saying like, look, we don't know if it's just a seasonal thing and then we get to Black Friday into November and then we see a rebound. Clearly the CFO has come out and said we aren't seeing that rebound. So obviously that's not great that PayPal are making these sort of comments. Last time in the conference call they said that it was a lower basket total, that the transactions are staying the same but the basket total is reducing. So I don't think there was actually a mention of if that was actually continuing going forward. But yeah, that's obviously something to keep watching. I don't know if it's a PayPal issue. I don't know if it's a complete macro issue. I mean, we keep getting some numbers out that look concerning, like the small businesses job data. And then we get some numbers out. I think we had some of the retailers in the last couple of weeks, and some of them are saying like things are going okay. So it's unclear whether this is a PayPal issue or a macro issue. So it's certainly something that's worth watching. One point I am going to make is that I've seen a few people commenting on like X, for example, and they've been having a go and going, oh, why is the CFO saying these comments and the stock's going down? They shouldn't be saying these comments. And it's like, well, guys, like he's speaking facts. If the numbers are slowing down, he's going to say the numbers are slowing down. It's going to come out at some point. If we get to the Q4 update and the financials are a little bit behind where they should be, we would all be shouting then, oh, well, why didn't they let us know that there was a bit of a slowdown going on? The CFO's just saying what he's seeing, really. And I couldn't believe the amount of people that like going, sack the CFO, sack the CFO. Like, you can't sack a CFO for saying what's factually happened. So I thought that was absolutely ridiculous. But it's certainly something to watch. Certainly for me, one thing that I'll be watching is the analyst numbers. So the analysts now will be picking up the phone and going to PayPal. Look, you said a slowdown. Do we need to adjust these numbers a little bit? And we'll see how much to start adjusting these numbers with the EPS downgrades and the revenue downgrades. At the moment, there's been a bit of a slight downgrade. I think we were expected towards a 6% growth and that's pulled back. Same on the EPS, I think that's had a little bit of a downgrade. I don't know if that's fair enough or we'll continue to see the downgrades. And then we'll have to see when the earnings come out, like, was it just like that slight slowdown? Or if PayPal come out with big misses, then we go, whoa, what just happened there? So it's very much like watch and see now, just to kind of see what impact that actually is going to be. And, us bottom of the pond fish, we aren't privileged to have these chats with management team that a lot of the analysts will be doing now and phoning up about, when you're saying these slowdowns, what's your new numbers? So we just kind of got to wait for them really, which is a bit frustrating, but it's certainly something to watch. But even if it's a miniature slowdown in the company, what I got to say is that you still got to remember the valuation you're picking this up at. You're picking up at 10 times forward earnings. So a little bit of a slowdown, I think, how much more do you want to be priced into the stock, So, yeah, certainly something to watch. The second one is HIMS and Hers. So HIMS and Hers, it's had a major pullback. I'm still surprised how much it's pulled back personally myself. I said to you guys a few months ago, I think HIMS and Hers will have a pullback. And I was thinking 20%, 30%. But the pullback has been even more than that. I think the pullback's been 40%, and at one point it was nearly 50% down. So more than what I was expecting. It's trying to have a bit of a bounce up at the moment, but they did have some good news yesterday. They did make an acquisition, which they did acquire BMY.L, which is a pioneer behind advanced pain-free blood sampling technology. We know this is an area that HIMS and Hers are very keen to expand into. And as I say to you guys all the time, people are not realizing that every time they enter these TAMs, there's so many TAMs that they still have to enter. And every time you enter them, you're entering multi-billion-dollar TAMs. So you enter this space, and all of a sudden, you're open to receiving a new 100 billion TAM. It's massive, the healthcare space. There was also another thing as well that came out. I didn't actually take a screenshot of this. That they're looking at, they're hiring someone to potentially enter the wearable health technology spaces. The watches, for example. So that is clearly something else that we might see coming up in the next kind of couple of weeks, which is interesting. But this is something that we've known for a while, and this acquiring of this company probably will help them speed up the launch into this blood sampling that they're looking to do. And just very quickly, maybe not the best slide here, but the blood collection TAM you can see here is growing at 8.7%, but it's not that what we're looking at. It's that the sampling happens, and then with the sampling, I've gone on this Newman website, for example, and the complete performance here basically gives them 20 biomarks, and this is only for SE. There's other health things that might benefit you from oh, by the way, you've got low iron, or you need to have these vitamins. This blood testing here, what it does is that the testing is to get people across the line. But then what you have is that, okay, you need this. So what we're going to sell to you is a 6-month package, prescription of these vitamins or whatever you need. And we sell them to you on a monthly basis. And that's where HIMS and Hers is then going to get you in and then get you to, buy these products. And then after 6 months, okay, you do our testing service again. Do you test? Okay, we resolve that issue, but now you've got this issue going on. So let's give you these vitamins, and that will help solve that issue. That's what it's going to do. So it opens up once again the ability for HIMS and Hers to, attack this, multi-billion-dollar industry, and they should do really well from it, to be fair. Next one, Bloomsbury. So stock had a nice bounce yesterday, you can see here, although it had a bit of a sell-off towards the back end of the week. But they signed a big deal. The Google and Bloomsbury did a collaboration, which is basically, from what I can tell, is Bloomsbury is going to allow Google to use a lot of its AI features to pull out the knowledge and the information from some of the pieces that Bloomsbury have. And then Bloomsbury get the kind of ability to cross-sell some of this and go, oh, this is from this information from this book here. Would you like to buy this book here that we have? And it looks like they're going to tie up a little partnership with that, which honestly should be good, because when you look at Google and Google AI, Gemini is now widely referred to having probably one of, if not the best AI product out there, and all the eyes and information that we'll be using and trying to get from Google and AI and Gemini and all the other products that it has. Hopefully that converts into some benefit that Bloomsbury will have through the book sales. So it looks like a decent partnership, a pretty good partnership. I'm surprised the stock maybe didn't bounce a little bit more. However, to be fair, I said the same thing in the private group, is that there's no numbers. So it's yeah, we got a really good deal with Google. That should do really well. Well, how much is it going to generate from you? What do you think you can generate $1 million a year from this partnership? Can you generate 10 million from this partnership? We don't really know. So I think that because there's a lack of context on like the number point of view, I think everyone went, oh, well, it sounds a good deal because it's Google and a lot of eyes are going to be on Google and it should tie quite well. But is this deal could be worth 1 million or 10 million? And that's a big difference. So, yeah, that's what happened with Bloomsbury on yesterday. Last one, Salesforce. So Salesforce did release the earnings last night. What a movement that were. Originally, the stock popped up about 8% after hours. And then it basically gave it all back. And now it's only up around about 1% in pre-market. So yeah, a big rally, then a big sell-off in Salesforce. I was saying on Tuesday wasn't it? I like it. I just don't know if I want it a little cheaper. 18 times earnings. I don't know if I want it about 16 times earnings, but I mean, the earnings looked okay. 8% growth is decent. Nice non-GAAP EPS beat, to be fair. They did hike up the guidance slightly, although it wasn't a big needle mover, but I guess it kind of shows that they've got financials under control where they can afford to go, yeah, we'll just bump those numbers up a little bit, which I guess is a positive with Salesforce. So they expect revenue to still be around about 9-10%, which is good. I think it might be a little bit higher than that because I think they did make an acquisition. And EPS was okay. The big thing that we are looking for is this moving into the AI side of it. And the reason why Salesforce is currently getting disrupted is people are thinking that AI is going to disrupt them. New companies will be able to use AI to basically replace Salesforce, which I don't think is true. So you're kind of looking at the agent force, they're kind of like AI products into this kind of space, is like, how's that growing? Because that is what we want to look at as, is that going to solve the issue? And are people going to stay with Salesforce because I don't need to go anywhere else? They've adapted to it. I still get all my old products, and the new disruption I still get with Salesforce, and people are still sucked into the platform. And they said that Agentforce ARR was about 540 million, which was up a 330% year over year, which isn't too bad because you look at revenue there, 10.2 billion. It's starting to come a decent chunk now, and growing at 330% is obviously is really good, to be fair. And even though it's a relatively smaller part of the business right now, is that it's clearly being used and people clearly like it. And as that scales up and gets a bigger part of the business, then you might see that acceleration in the growth rate, because obviously it's still going to continue at 330% going forward as it gets larger. But if that continues to grow at like 200%, 100%, and it gets bigger and bigger and bigger, all of a sudden you're looking at someone like a Salesforce and you go, well, it's coming to that part of the business now where it's actually generating, acceleration onto the business. And that's where you see the growth rates start going up 9, 10, 11, 12%. And when you get into that sort of position where you start seeing those growth rates accelerate up more, that calms down. That will calm the market down. And all of a sudden you'll see the market flick the light switch and they'll go, oh, Salesforce is getting disrupted by AI, and the market will go, oh no, the revenue growth is accelerating. The reason why is because they're really benefiting from AI, and AI is helping them. And as soon as the market switches from the negative tone to the bullish tone of that it's a disruption from AI to it's benefiting AI, and the numbers start accelerating, you watch the market will end up falling back in love with Salesforce. And what you'll end up with Salesforce happening is you'll get the re-rating, because if let's say they fall into next year's numbers of around about 21 times earnings, all of a sudden you go, oh, we love Salesforce again, and the market will throw it up to a premium. It will throw it up to like 25, 26, 20, maybe up to 28, maybe even 30 times earnings. I would say somewhere between 25, 30 times earnings. And you'll see Salesforce have a big jump. So it looks like if I personally was a Salesforce shareholder, I'd look at that report and I'd go, yeah, it looks like at the moment the concerns that a lot of people have, Salesforce look like they're dismissing them still at the moment. So yeah, I think it was a decent report for them. I still stand on the on the side of that. I still think I want Salesforce like 10, 20% cheaper. But as a neutral that's got this one on my watch list, I was like, yeah, I thought those weren't too bad at all, really. So I'm watching that one overall. But that's everything, guys. Hope it was useful. Thanks for watching anyway. See you in a bit.